Hello and welcome to our daily market review and analysis. Thank you for joining me. This is a session we should have had on Friday evening after the market close. However, I'm recording this on a Sunday. In UK it's approximately 7 o'clock, so well before the market opens, and I hope the video will reach you in good time. However, as we are looking for trading on a larger swing trades, you should be able to have enough time to plan for your trade. So let's begin. First of all, we will look at the Dow Jones Industrial 30, and just to recap the Dow Jones Industrial 30 so we can reposition ourselves correctly, and that is we've started off from here, October 2011 rather, and we have gone up so far in what appears to be this first swing up, which I've labeled as W, X, Y, X, Z. So essentially it is a 5 wave or 5 swings, but we can't label them as 1, 2, 3, 4 and 5 because it doesn't conform to that. So it's W, X, Y, X, Z. So that gave us a wave A. Then we had a retracement A, B and C to give us a wave B, and now we are in a process of developing a wave C. So we got wave A, wave B and wave C, and in that wave C you can see we have wave 1, wave 2 and currently in a wave 3. So the wave 3 has started from November 2012. So in a wave 3, and we haven't finished the wave 3 yet. So we got wave 1 in Roman numeral in bracket, wave 2 in Roman numeral in bracket, wave 3 Roman numeral in bracket, wave 4, and currently trying to finish off wave 5. If you just look at the RSI, then the RSI correspond with the highest momentum in wave 3. So we had a wave 3 here, wave 4, and we are now developing wave 5. And within the wave 5, which is the last wave of this wave 3, so we'll finish up wave 3 once this cycle is complete. And whilst it's in an uptrend above this trend line, which I'll make it darker color, that trend line, then we are still in a wave 3. So once we complete and we break below that, then we'll be retracing for wave 4 and then one more leg of wave 5. So what this suggests is that in a very short term we might be near completion of this cycle wave 3, and once we complete that, then we will have a retracement and then another leg higher. So in a very short term still trending up, intermediate term we could be topping and we might retrace, and longer term we've still got further upside on the Dow Jones Industrial. So if we look at this section here on a 4-hour chart, so you can see we've had this -1, -2, -3, -4, -5. So that finished this wave 3 in bracket, wave 4 in bracket, and we're now developing this wave 5 in bracket. So within that wave 5 in bracket we've got very small -1, -2, -3, -4 and -5, and in a -5 we've still got a little bit to go. So bearing in mind that this is a 4-hour chart, so we will have, for example, if you look at the RSI, then RSI in this part is the highest with the reading here. So this is wave 3. So we are probably going to continue like so, for example. So here we have very small 1, very small 2, probably 3 done, 4, and we've got a bit more leg to go up to the upside. So we may well have wave 3 still not quite finished, one drive up, small retracement, and then another drive up. So probably if you consider this, we might find best part of the week, we might find Dow Jones Industrial still trending up, and I think it'll probably reach somewhere about 15,000, and then we will get this wave 3 completion, this wave 5 in bracket, but that also completes wave 3 in bracket, wave 3. Then we will retrace for wave 4, A, B, C. So that from 15,000 possibly we may come down to 14,200 or so, and then we still have a leg 5 up. So that's what I mean, is that in the very short term we're still trending up but nearing a top. Intermediate term we will be topping and come down, and then longer term we've still got another leg up. So I think this is going to continue for a while, and we may not be actually at a significant top, which will be A, B and C with a 5 leg up until we reach maybe well north of 15,000. So that suggests the bias is still to the upside for the equities, with usual retracements allowed. If you look at the oil, then on the oil we have this little unusual pattern here, in a sense that we have a triangle, but it's not quite the triangle starting from here. So let me just explain quickly that we have a wave 1 of the very low here back in 2008. We have wave A, B and C that gave us the W, wave X, and then we've started up again, and we've got again W, X and Y. Okay, so we've had A, B, C for W, wave X, and again probably A, B, maybe here A, B, C, so that gave us Y, and that Y also then finished this W, X and Y. So we finished wave A. Then I think we're in a triangle which I've been pointing out for some time, and in this triangle we've got A, B, C possibly to give us a wave A in bracket in pink. Then we got A, B, C back up to wave B in bracket. Then we got A, B, C, so wave C in bracket. Then we got A, B and C, and okay, let me pull back a little bit. So here we have wave A in bracket, wave B in bracket, wave C in bracket, and then this area here, if I take this line off, you can see it's a sort of a triangle, and it also goes triangle within the RSI here. So I think what's happening there possibly is that we've got wave B, we've got wave C, and then we have a triangle which is A, B, C, D, E, and that gives us wave D. So wave B in bracket, C in bracket, D in bracket, and now we are, I think, coming down to form this wave E in bracket. And once we complete wave E in bracket, that in fact will complete the entire correction. So we will have W, X, Y to give us wave A, then we got this A, B, C, D and E to give us wave B, and then we should go up. So oil suggests that it may still continue to the downside. So this is a little bit unusual in a sense that the equities are still appearing as though they will continue up, but the oil will continue to weaken. Then we will go another leg up, ABC, to complete this entire cycle correcting from 2008 low. So by then, of course, we will be in some significant downtrend both on the oil as well as probably the equities by then. So for the time being, oil is not conclusive, but we are in a triangle, and I think we will drop down to somewhere in the region of 80 by the time the oil completes the correction. And equities, as I say, we've still got some further upside. Now if I'm wrong, then of course what we would expect is this minor trend line I put in there for W, for a wave 3 rather, we would finish that and we would drop down. That's when we will know that wave 3 is finished. And we've still got this 1, 2, 3, so we still expect 4 and we still expect 5. So I think the equities will continue higher, whereas the oil, for some reason, which normally is always going along with the equities with minor variation, looks as though it is pointing to the downside. If you look at the RSI, then on the weekly RSI, you see it is still coming down. We may finish this RSI being breached to the downside, and if we draw this trend line, then it's possible that we may find RSI drop all the way to come back to the baseline on this weekly RSI trend line. So that's where I think the oil is likely to bottom out, i.e. down there. Like that, and then finding a bottom and going up higher. So we are looking for that leg to drop on the price, come to round about 80, between 80, 82. If you say the higher end is 83 and the bottom range round about 81, so 83 to 81 is approximately where we think the oil is going to drop to. And of course, if it has a real sell-off, quick sell-off, it could do that quite quickly. But on the other side, it might take a little bit longer. Okay, so the oil is down, equity is still trending up, and if you look at Nasdaq 100, that also suggests trending up, because that one we've had this 5-wave move down from the high back in September 2012. We had this 5-wave move down. It looks like we've now retraced A, B and C with a wave C in rising wedge formation. So as soon as that finished, then that will start trending down. So maybe it's still got a bit more to go. It's possible that it's got a 1, 2, 3, 4 and 5. So maybe this one's got a little bit lower to come and then up. So Nasdaq 100 is also suggesting a bit more upside before that one finishes, and then it begins to decline. If we look at the UK 100, then UK 100 is quite an unusual place, and we yet need to remain or yet need confirmation. But see, this first drop of 2000, that was a large wave A, ABC back as a large wave B, and wave C down, so possibly that should have completed the correction. But this movement is not really a proper correction. So we may have few things going on here. Either we've got wave A, wave B and wave C complete, or A, B and this C is not a C, but it's only a first part. So like wave 1, we are now retracing in A, B and C, wave 2, and then we'll start coming off, selling off quite quickly. But really we won't know. But for the time being, it looks like it is still trending up. You see on this RSI, it looks like it's still got a bit more further upside to go. If we drop down to weekly or even daily, you see that it appears that we've had a wave, this triangle formation with the wave B, and now we are in a wave C. So if you're a wave C, it could be 1, 2, 3, 4 and 5 nearly done. And if the 5 is done, then you can be wave A, wave B, and we've got some more leg to the upside. So chances are the UK equity is also pointing that there is further upside to go. So all of those indexes are suggesting that there is a further upside on equity. However, the oil is likely to fall down. And in terms of our usual dollar index relationship, we know it should be negatively correlated. That means if the equity and oil go up, we should have dollar index coming down. But that's not been the case since this low in February. We've had a situation where the dollar index gone up, and we've also had equities going up. However, I think from this area, which is the top on 4th of April, I believe that we may well be getting back into normal sync. No, when I say normal sync, I mean to say normal relationship, which is negatively correlated. Whereas from low here in April, or February rather, from February, 1st of February, we have gone up together. Oil, equities, dollar index, generally speaking, have all gone up together. But I think now we are beginning to go back into normal relationship, which will be negative correlationship. So at the moment we've had equity still going up, dollar has come down. So maybe the dollar is in its early stage of a downtrend, and there's only one proviso that I need to just point out and keep in mind until we get confirmation, before we become really convinced about which way the dollar is going. So if this is the weekly chart on dollar index, and I won't explain to you all greater length of this wave count, but we're looking at just this basic triangle. So in that triangle, there could be a couple of things This one we definitely know is a wave A in a large capital. Then we've got A, B, C here, which is a three swing. That could be minor A, B, C up as a minor B. Then we got A, B, C down. So maybe that is a capital B. And then we are now trying to go for wave C. So if it's a normal relationship, normal swings, then we go like A, B, and we should expect C much higher. But somehow I don't think that's going to be the case, and for the reason that I've explained several times in the past. But we still need to understand exactly what's going on in this area. So if we assume this is the capital wave B, then I think we've had this like a rising wedge, the small a, small b, small c. So that gave us capital wave C. Then we had A, B, C down as a wave D. And I think we got A, B and C up to give us wave E. If that's the case, then I think the dollar index has stopped in that area. Now the idea is that we need a confirmation. See, if you look at the RSI on this weekly chart, then on RSI you see wave A, then you get A, B and C to give us wave B, A, B and C to give us C, A, B and C to give us D, A, B and C to give us wave E. So you can see that triangle quite clearly on the RSI on a weekly chart. So we should be finishing here. And we also noted previously that when we follow this pattern here on Elliott wave, you get A, B, C up, A, B, C back. So if you had wave A and B with A, B, C swings, i.e. A, B, C, A, B, C, and it's retraced more than 90%, then it's considered as flat correction. So wave C would have 5 wave. So using that particular fingerprint, we can see so far that we've had a 5 wave up, i.e. after A, B, C up to give us A, B, C down to give us wave B, we've had a 5 wave. We've got wave 1, wave 2, wave 3, wave 4, and I think we've got a wave 5. So now it remains for confirmation, so that this decline needs to be impulsive, because if this triangle is complete, we need an impulsive wave to the downside. And that's the only thing which will confirm if we've actually got our bearings, completely right, before we begin to get a very strong bias in the dollar index. But for the time being, we're expecting equity to continue up. So if the dollar index gone back to normal relationship, we should expect a decline in dollar index. And when the equity index retraces downward, we will find a retracement in dollar index back up. And then when the equity continue higher, we should find dollar index continue dropping lower. But we want to see an impulsive move to the downside. So with that understanding, if I go into the shorter time frame on dollar index, I am a little bit struggling to actually form a very clear impulsive move to the downside. Okay, I'm struggling a little bit because this initial drop was fantastic, but then over here we seem to have somehow stalled. So if I now try and explain what I think we have here, I think we have a drop here as a wave minor, very minor 1, minor 2, minor 3, minor 4 and minor 5. So if that is a 5 wave down, then what we might have, if that's a 5 wave down, then go wave A, wave B, and we should retrace this somewhat. But I'm struggling with this area here. If I take a 30-minute, then you can see on a 30-minute, maybe this very strong impulsive down as a 1, 2, 3, 4 and 5. You see, so this here appears like it's probably one complete wave. So after the one complete wave, we want ABC back up, but we haven't got that here. So maybe, and you see this one I think looks like a falling wedge. If this is the falling wedge, then what we've got is a 5 wave move down to give us a wave 1, wave 2, then possibly here 1, 2, 3, 4 and 5 to give us wave 3, wave 4 and wave 5. So maybe this is what we got going. So we expect dollar index to drop a little bit and then retrace. So then we would have a leading diagonal. You see, we got 1, 2, 3, 4 and 5. So by then we'll have a leading diagonal. So if the dollar index dropped to something like 82 area, I mean we are close, we are at 82.09, but if it drops a little bit lower down, maybe even like 81.90 or something like that, then possibly we will complete a falling diagonal, falling wedge as a leading diagonal. That means minor 1, minor 2, minor 3, minor 4 and minor 5, and that would complete the 5 wave. And if that's how it plays out, then after the 5 wave we get ABC retracement to the upside. Make it a little bit more realistic. Like that. ABC retracement to the upside, so that will be wave 1. For example, this here will be wave 1, and we'll see wave 2, and then the very strong one, wave 3. So at the moment we are not rushed. What we want is this wave finishing. We want ABC retracement, and depending on what kind of retracement we get, if it confirms what we are expecting, then I think we've got it, because then we will be in a wave 3 which will be very, very strong to the downside. So dollar index, it appears as a little bit more downside and then possibly retracing. Okay, now it's possible that this wedge might change. It might, for example, go on like that, and we may have a bit more further downside on dollar index. So regardless of all that, we basically want dollar index to finish bottoming, do a retracement, and if it does exactly what we want, ABC retracement, then we will have had wave 1 down and wave 2. Okay, now in the same way, if we look at the euro against, if I can find it, because so many different charts in here, maybe I should take some off. Okay, this is what we're looking for, right? So okay, so we've got a lot of scribbles here, but if you just look at it, then this red and blue is the euro, and then the one in green and yellow is the dollar index. So we've just said that dollar index had ABC as a flat correction, right? Not a triangle, a flat correction, and then we had a 5 wave up. So now we should be coming down in a 5 wave sequence, or very strong impulsive wave to the downside. So in the same time, if you look at the euro topped here in February, then it's come down in several zigzags to form a bottom. Okay, now it looks like the euro has gone up in a wave 1 up, and I'll come to that in a moment in finer details, but it got wave 1 up and it's not quite finished yet. Likewise, the dollar index has come down in a wave 1, but it's not quite finished. So eventually what we find, we want to see is, we want a euro to retrace a little bit, for example, like so, and then for euro to start heading up very strong. And during that time, what we want is dollar index to finish the current wave, retrace a little bit, and then start a very strong move to the downside. So that is basically what we're looking for. So in terms of a real trade, if you want to trade euro and also understand where the dollar is going, then basically this is what we want. We want the respective current leg to complete. We want both to retrace respectively, and then once that is finished, then we would have had wave 1, wave 2, and we'll be moving up very strongly in wave 3. And likewise, dollar index will have finished the wave 1 down, retrace wave 2, and in a very strong wave to the downside. So that's what we are expecting in terms of where things are going to go overall. Just clean this up a little bit. Okay, so that's basically what we are looking for. So let's have a look at the US dollar pair, which is normally what we look at, and then we'll come back to pound, euro and Canada in a second. So US dollar pair, and the first one on the US dollar pair we look at is the dollar Swissy. Now if the dollar has stopped, we should see that same thing showing on dollar Swissy. And I think what we have here in dollar Swissy is from the high we had back in July, it looks like we moved down in wave 1, wave 2, and then all the way down to here is a wave 3. Let me see. Okay, wave 3. So you got 1, 2, and then 1 in bracket, 2 in bracket, 3 in bracket, A, B, C, A in bracket, A in bracket, A, B and C is the B in bracket. So this should be A really. A, this one B, and it's less important, but we just trying to get ourselves in correct formations. To go 1, 2, then go 1 in bracket, 2 in bracket in Roman numerals, 3 in bracket, wave A, B, C, wave B, and back up there. So that's a wave 4, and then this one is wave 5. So that completes 1, 2, 3, and I believe that this retracement is a wave 4, and we've now started our impulsive leg to the downside. Okay, so in that impulsive leg to the downside, I think we've had this messy looking but a leading diagonal wave 1, wave 2, and then we've started in a wave 3, which is 1, 2, 3, 4 and 5, and this 5 might finish up like the falling wedge pattern. Just change the color of that one. See, like that. So you might finish up wave 5 as a falling wedge pattern, and that would complete this wave 1 in bracket, wave 2 in bracket. So this will complete wave 3 in bracket, and then of course we'll get a retracement, wave 4 in bracket, and then we'll see another leg down, wave 5 in bracket, for example. Okay, so this one looks like he's already setting off an impulsive leg to the downside. So that confirms that I think the dollar index has stopped, and that against the Swissy at least it is in an impulsive down leg. Okay, so that's one confirmation, but we will see further development to help us get a completely clear picture as to exactly where dollar index is going. You know, does dollar index have a further upside, or is it likely that we will now continue to find dollar index moving down quite strongly? But this is what we're expecting. We expect this current cycle to finish, small retracement, and continuing down for dollar Swissy. And in the same way, we will look at Aussie dollar. Now, Aussie dollar appears to be I think in an uptrend, and it is causing a lot of confusion because of this triangle. Okay, now exactly what it's going to do we probably won't know, and we've been guessing and we've been switching our views several times, only because there are two possible outcomes. So wave A here, we've got a sort of a triangle to form a wave B, and then we should expect a wave C. That's the overall outcome we are looking for. But exactly how we're going to get that element, I think, is a little bit unclear. And for example, if we say this is capital wave A, then we got wave A, B, C, D and E. Now, is the E finished? If the E has finished, then essentially we would be looking for an up leg straight from this area. So while the dollar continue declining, we would expect Aussie dollar to continue higher. Or Aussie dollar still got a drop to do, like an oil has a drop to do to here, before going up. So those two are the only possible thing which we are not completely certain about. But at the moment you can see that based on the RSI, we have come to the upper end of this what looks like to be some kind of a triangle, and we have turned back. So it's possible that the price will come back. If the price come back, either price will only retrace partially and start going up, or it will drop all the way back here and then go up. And that's the element which I am not completely certain about. But once we have the price is due to drop. So once the price retraces, it depends on how it retraces. Does it retrace to this minor rising trend line rather, in this area to go up, or will it drop in ABC retracement right down to here before going up? So what I would do for the time being is I would not necessarily trade Aussie dollar because of the uncertainty. However, we need to try and keep an eye on this, because we are going to be trading Aussie pair or Euro pair or pound pair, like a pound Aussie or Euro Aussie, for example. Okay, and an important point also is, if this was a new leg up, it doesn't look like it. You see, for example, from here, when I'm looking at this, ideally I want some impulsive leg to go up, but so far it doesn't look like we've had an impulsive leg. To me, this like A, B and C to give us the wave A, this wave B, and we've gone up in wave C, and in a wave C we've got wave A, wave B and wave C. So this first one up here is A, B and C. So if that's the case, then that's a larger A, ABC down is a larger B, and then we've had a wave C. So then we should finish really, because if you look at the RSI is also showing divergence between wave A and wave B. You see, like that. So my feeling is that we should expect, and then in this last wave up, you can see we have a clear 5 wave. Take that off. We have clear 5 wave. We've got 1, 2, 3, 4 and 5, I think. So now we should start seeing quite a strong move to the downside. We've got 1, 2, 3, 4 and 5, small retracement, and then a larger decline to come. So Aussie dollar, I think, will remain weak, relatively speaking, from where it is now. And it's the only question of how far it's going to decline. Is it going to decline only up to this area here, to an area around say 1, or is it going to do A, B, C down to this area? That's the only part we are not certain about, but we are looking for Aussie to show potential weakness at this area. Likewise, the New Zealand dollar, similar. New Zealand dollar has done what looks like to be A, B and C, or A in double bracket, B in double bracket, then A in single bracket, some kind of a congestion. We want that congestion resolved, and then we see another leg up. So eventually they will actually make a new high. However, in the current area, it is not very certain. One of the things I'm expecting is, if this was a wave A, then I think this is A, B and C back as a wave B, and I should expect wave C, and wave C normally starts off with a 5 wave movement to the downside, in which case the New Zealand will be very weak. But somehow I can't quite understand how that would happen. So the alternative would be is for New Zealand dollar at least to retrace and drop back to this rising trend line, to this area here around about say 77, and then head higher. So both Aussie and New Zealand dollar looks like they're going to be retracing in the next week or two, coming to an area where they are likely to then find an intermediate bottom and then head higher, or they'll continue much lower before they find an intermediate bottom from where to move up. So New Zealand dollar and Aussie dollar, I suspect that they will both weaken, but we will need to watch this, because one of the other things that could have happened here is this one here is wave A, wave B, and we might have finished here as a wave C. So maybe the congestion is all over. If the congestion is over, then in New Zealand dollar at least, we've got like a rising wedge. Now that rising wedge will now change the meaning, because that could be rising wedge instead of C, that could be a larger wave A, this is larger wave B, and we've now started going up in a wave C, in which case we'll continue to see higher high and higher low. We'll never see these one coming back down to this area. Okay, so we need to see just what kind of retracement we get. If the retracement now is only minor and it is very corrective in nature, then we know that we already have a bottom in place, and we are likely to be, let me change the color of that one to say that, so we'll see ABC retracement, and then we'll probably continue heading higher. Okay, so another couple of weeks we would know which way the Aussie and New Zealand dollar are going against the dollar index. So either they already finished the congestion and they're on the way up, or they have a bit more congestion to complete. Now, if one thing we could conclude is if the dollar index is actually in a new downtrend, then it makes sense that Aussie dollar and New Zealand dollar have actually finished their congestion and they're also in a new uptrend. Okay, so in which case New Zealand dollar is actually currently right in an uptrend, and if that's the case, then on a retracement you don't expect it to come down significantly. You only expect it to come down marginally, and then, like I've indicated here, and then head higher. So we'll have to see what it does. If you look at the Aussie dollar in a same way, Aussie dollar may well have, for example, done this here, A, B and C back, and actually ever since here, is actually in a new uptrend, which many times I have concluded that, but then the thing has just gone sideways and is really given us no helping hand at all. For example, this going up here, in the previous charts I have actually concluded this as an impulsive wave A, in which case this one impulsive wave A, so this would be like A, B, C to give us wave A, in which case we've got wave A, wave B and wave C. So maybe that would be A and B, and we have started off in a new up leg, but the price action here doesn't look too convincing. So that's where the uncertainty comes in. But generally speaking, if the dollar index is declining, then we should be expecting in the main Aussie and New Zealand dollar also gaining against the US dollar. Most US currencies we would have dollar weakening and other currencies strengthening against the dollar, with exception of yen, of course. Now in the yen, this is what I've got so far. Is, as you know, we've been tracking this for some time, and we've started off from the low here back in September. We've got wave 1, wave 2, then ever since we've been doing wave 3, and I think the wave 3 is complete, because we've had this wave 1 in bracket, wave 2 in bracket, 3 in bracket, 4 in bracket and 5 in bracket. So that finished the wave 3. So we go wave 1, wave 2, wave 3, sharp retracement wave 4, and we are now in a finalizing wave 5. In that wave 5, what we need to do is to see if the wave 5 is finished. Because if wave 5 is finished, then that would also complete a larger wave 3, meaning from here we have wave 1 in bracket, wave 2 in bracket, and then larger wave 3 in bracket will be finished. We'll expect a wave 4 retracement, which might come to here or might not, might for example even come up to there, and then go up higher to finish off with wave 4 in bracket, and then wave 5 in bracket further up. So US dollar yen will still continue up, but in a shorter term I think it's got some retracement to do, and this is what I mean by retracement, is that after completing this here, which should be that one, wave 3, 1, 2, 3, 4, okay, this one let me just redo that one. So this one here should be 1 in bracket, Roman numeral 1 in bracket, because we finished that cycle here. Okay, wave 3 finished there, so we've dropped down to wave 4, and now we are doing wave 5. So wave 5, we go wave 1 in bracket, wave 2 in bracket, then we got wave 3 in bracket, 3 in bracket, then we've got wave 4 in bracket, and we are now currently in wave 5 in bracket. So if we see wave 5 in bracket, and you can see here we've got within that 5 in bracket we've got 1, 2, possibly 3, 4 and 5, and I think it's finished. Personally, I think it's finished. So that would complete the cycle which completes the wave 3, and we should now expect significant pullback. Significant pullback meaning at least coming back to this sort of area here, around 92 area, 93 to 92 area. Okay, so that's what I'm expecting, 93 to 94 area. And we just look at this last piece here in 1 hour. So if you see here, for example, 1, 2 and possibly 3, retracement 4, and then what we've got is possibly some kind of an ending diagonal like that. See, like that. So that's where the wave 5 finishes. So we got 1, 2, sorry, here 1, 3, so 1, 2, 3, 4, so that should be 4 here. Wave 4, and then we got this last one ending diagonal, wave 5. So currently this one should be coming down, and all the momentum indicators and everything is already confirming on a higher time scale that we do have. For example, on a daily we have a massive divergence like that, almost like a triple divergence. Okay, then on a shorter term we have a divergence between this high and this one. You see, this high and that one. And then within the last cycle we've also got divergence between this and this one here. Like that, you can see. Okay, so we are now moving that to the downside. So I think currently we are in a significant pullback, and what we will get is we'll get like wave A, wave B and wave C, kind of a retracement to the downside, which will bring us to around 93 or 92 area. And then after finishing that is where we would expect, let me just make this a little bit realistic. Something in the order like that, maybe. Like that. So we see wave 4, and then we continue higher. So for the US dollar yen, although the yen will be the weakest, but the fact that it's completing this cycle, and therefore if the US dollar has topped, it's also important that it tops in the area where the yen shows weakness. Against the yen shows weakness too. So we will then see most of the yen currency pairs, we won't look at that now, but most of the yen pairs should be in an area or will be there very shortly, and will be doing this kind of a pullback to coming back to the retest the last low on say daily or daily chart, last low, and from there they will continue higher up. So at the moment I'm expecting US dollar yen to be coming down. So currently, for example, if you're looking to short that, then what you need to do is you need, for this current cycle to finish, you want that one to retrace, and that's where you short. So then your stop will be above the high, and your short maybe somewhere about 99 or something like that. And at the moment, if you look at that in a shorter time frame, you might have what we got like a expanding wedge. You see, that's what I mean, expanding wedge. So in that expanding wedge, you can see you probably got wave 1, wave 2, wave 3, wave 4 and wave 5. Within the wave 5 you got 1, 2, 3, maybe small bounce and another down here. That will complete the wave 5, something like that. that will probably complete wave 5. Okay, after that you will expect a retracement to the upside, and that retracement, once we get a retracement, that's when we can short. Okay, so that retracement will be ABC up, see, almost like that. Okay, ABC retracement to the upside, back to, put a Fibonacci on, then should be able to, just eyeballing it, should be able to bring us somewhere in that area around 99 or a little bit higher up, and then you can short with a stop above the previous swing, and the target will be going down to about 92 somewhere in due course. Okay, it will coming back to this sort of area here. See, coming back to that sort of area there. No, sorry, around this sort of area here. So in fact, once it does, we might even get a 5 wave to the downside. So what I mean by that is you might get like 1, 2, 3, 4 and 5 to give us wave A, ABC retracement, and then another 5 wave down. So next one should be wave 3, and that wave 3 should be quite strong wave to the downside, and also you can see now that you'll be getting something like a left shoulder, head, and possibly a right shoulder. So on a retracement, I think it is worth considering a possible short using, you know, a strict money management rule and correct position sizing for shorting. And I would say if you're going to short, then you really need to short something that's going to be weak, and overall we are expecting something like say Canada, Aussie dollar or New Zealand dollar to be relatively weaker. So maybe one of those currencies could be shorted, or indeed US dollar yen. Okay, so that's the US dollar pairs done as far as we are concerned over here. So we'll now look at dollar Canada. Now in the dollar Canada, just like we noted in the Aussie dollar and New Zealand dollar, that they are almost about to be topping and they should be pulling back, the dollar Canada has been very, very weak. And I think what we've got here is possibly some sort of a wave A, B and C, and you can see on the daily we got divergence on the RSI. So that, not a huge one, but just minor divergence on the RSI. And I think what that's doing is that we should have 5 waves up here. Somehow we've been struggling to get that 5 wave. So I think we've got wave 1, wave 2, wave 3, and I think this is all part of a wave 4. And so far we haven't actually breached any of the significant guidelines, other than this wave 4 now is really knocking on wave 1 here. So we don't want that one. We've got a small spike into it, that's okay, but we don't want significant movement into that. And as you see on a Friday, we look like we've got a bullish harami, bullish, like you can see here, bullish harami. So it's possible that if the dollar index completes its current cycle down and begins to retrace, then we should get a retracement on here, and that would complete our 5 wave we are looking for dollar Canada. So dollar Canada will do like that. In fact, it'll actually do 5 waves: wave 1, wave 2, wave 3, wave 4 and wave 5, like that. That's what we're looking for. It needs to do 5th wave and fifth wave will be 5 waves internal minor 5 waves, and by that time the dollar index will have done its retracement of the current decline, and then it will continue down, and even against the Canada it will also fall. So this is telling me that the current decline on dollar index is near enough completing, and we should see a strong rally, relatively speaking. That strong rally against the Canadian, against the rally against the Canadian and Swiss franc, and then declining against Aussie dollar and New Zealand dollar. Okay, that's a Canada. So US dollar Canada, we should be looking for, if you want to trade this currency, you should be looking for going long. Going long means a stop just below, and the target would be the previous high. So overall it's about a couple of hundred pips, so it's worth, if you wanted to trade that, it is worth considering going long, where, for example, either on a partial retracement, so maybe like 1.01 area, or if it takes out the high of Friday, you can go long, and a stop just below, that's be like about 60-70 pip below. But if you get a partial retracement and say you get a fill around 1.011, then your stop will only be about 30-40 pip, 40 to 50 pips, say, and you target about a couple of hundred pips. So that'd be a good nice trade. Okay, so that will be possibly dollar Canada. And also you can see, if you draw this minor trend line connecting this low and this higher low, recent one, then we should be able to find that price maybe come back down, but not as far, and give you a possible, if you drop down to 4 hour, then, or 1 hour, then this is what I mean. Is, for example, it has already done wave 1, wave 2, this is probably 3, you expect it to pull back to 1.01, and possibly in that area is where you look to consider going long, with a target stop below and target to the last high over here around 1.035, or maybe 1.04 for dollar Canada. We look at pound dollar. Now pound dollar, previously you know that we come down in this 5 wave impulse down, and I think that was an overall correction. So we've had a wave A, then we got A, B and C. So all of that I think is the part of wave B. So that last leg down would be impulsive 5 wave, because it's got A, B and C, and wave C is always 5 waves. So if that's finished, we've got a bottom, we should now start seeing this strength to the upside. Remember, wave C in 5 waves. So if you had the wave A, B and C as the larger wave B in capital, we are currently in wave C, so this one should be impulsive with a 5 wave move. Okay, now in that 5 wave move, we've got an early stage of possibly what looks like a wave 1, wave 2. We are currently in a progression of forming this wave 3 in Roman numeral, wave 4 in Roman numeral, and wave 5, and that wave 5 will finish with a larger cycle, wave 1. Then we get wave 2, wave 3, wave 4 and wave 5, like that. So in that sense we will finish up with overall target moving to here. It will take several months to get there, but I think we are looking for pound dollar to be in a new impulsive leg, just like looking for dollar index to be in a new impulsive leg to the downside. So as far as the pound is concerned, looks like we've done a wave minor 1, minor 2, and we are in a minor 3 up, and within that minor 3 the waves here is a little bit difficult to actually count, but quite possibly this one is probably A, this is A, B and C. So ideally you want to get long on a pound against the dollar, pound dollar. If you get the price drop to about 152 to 152.30, that would be a perfect area to get long, and your stop would be this one here. So at the moment you will have probably say, well, when you get a bottom there, we'll know where the bottom is going to be, because at the moment if you put a stop, then I think the stop is quite distant away. It's, if you put it here, that's like 200 pip away. But if your position size is correct, that 200 pip away is in a catastrophic stop loss. So it's not something you would actually wait for it to be triggered, because you're not expecting price to come anywhere near that. But it's like, you know, if you weren't able to do anything and the price just simply dropped, then that would be catastrophic stop loss. But ideally, you can see horizontally, we've had an area where there's a lot of, here for example, resistance, come down, resistance, resistance, and now we've broken above. We should have some kind of support in that area. So if the price drops here to 152 to 152.30 and you go long, then your stop can be here, because the upside we are looking for is substantial. For example, if you get long here, we're expecting an intermediate run to somewhere in this sort of area here, 157, 158, but you know, maybe much higher. So we'll be able to then walk that and probably add positions as we go along. So that's pound dollar. So that also suggests, if it plays out like that, that maybe perhaps dollar index is in a genuine downtrend, which is a little bit too early to fully confirm, but we will soon know, based on what kind of retracement we get here and based on what kind of a retracement we get on the dollar index to the upside, and that would confirm the resumption of the larger degree trend to the downside. So that's the pound dollar. We'll come on to the euro dollar. Okay, now on the euro dollar, I think we have bottomed here, and just like the dollar index, the waves count are a little bit difficult, but I think you got a first thrust off, so I'm labeling that as a number 1, small pullback number 2. So now we are in number 3, and in number 3 we've got 1, 2 in number, in Roman numeral, 1, 2, 3, 4 and 5, and the wave 5 is like a megaphone pattern. So you go 1, 2, 3, 4 and 5. So if it's finished, then that's like wave 1, wave 2, wave 3 finished. Then we have a wave 4, and this big thing here is wave 4. We got minor A, minor B, minor C. Then we got wave X, and we again got minor A, minor B and minor C. So if this is minor C, then that is wave 4, and we are now progressing in a wave 5. And what I suspect in wave 5 is we've got this Roman numeral minor 1, minor 2, we'll go up minor 3, minor 4 and minor 5. So once that complete, then they will do a reasonable retracement, and that is where, so once that complete, by the way, we will finish up there as a wave 1 on a larger cycle, like so, wave 1 in bracket, wave 2 in bracket, and then we'll be heading up higher. Okay, but this area here has been a bit difficult, and I've done the best job I think I can, and that's basically still expecting euro to continue higher for the rest of the week, probably, at least the best part of the week, and probably back end of the week we might begin to see euro topping and dollar index bottoming out, and then they'll be engaged in this larger cycle decline. Okay, so in terms of euro, you know, how much higher it will get from where it is now, maybe another 100, maybe a couple of 100 pip, something like that, maybe like 132, 132, maybe 132.50, somewhere in that area, and then do a decline. And we should see on a 4-hour chart, you see at the moment, it looks like we've done a wave 3, we've done a wave 4, and we're currently going in a wave 5, and we should see a divergence between, on a 4-hour chart, we should see a secondary dive. We've got a first divergence, but that is only reflecting the wave 3 here, A, B, C down as it were, wave 4, and we're now going in wave 5. Wave 5 should then not go as high as that RSI reading, it should stop short, and we will get a divergence. That will confirm that our first cycle is up, and we should be then declining to form a second cycle, and it should be like I've drawn here, A, B, C down is what I'm expecting there. Okay, now in a larger time frame, if what I'm thinking is correct, then this is the pattern we'll be following. Remember, on the dollar index we were following this pattern. dollar index, we were following this pattern here, ABC, ABC, and then 5 wave. So we are going to be following this pattern in the euro. I think we've got from the July low is here. So July low, we got wave A, ABC down as a wave B here in November. So we got wave A, wave B in November, wave C in February, which is this high here, and this one down I think is a wave X, is a connecting wave X, in which case we should see another A, B and C to the upside. So we have started up and we have just bottomed here where wave X is, okay, and we have just about completed the first wave up. We got first wave up, then you got wave 2 down in bracket, then you got 3, 4 and 5. That will complete wave A, wave B and wave C, like that, okay. So that's what we're expecting, and by that time we should be expecting, by the time this from the X here first wave is finished, we should be expecting euro to be almost testing this previous high, maybe even making a new high, then do a retracement as a wave B and then go up again in a wave C. So the euro should be pushing higher, and we'll be following that particular pattern I just outlined on there. If we are wrong, then we will find, we'll soon know, because from where euro is now, we'll finish that and we'll find the euro begin to move down strongly, but I'm not expecting that. So I'm expecting once we have this 5 wave up, and if the euro then does ABC retracement like this, so again let me just make that a little bit more realistic. That one drops down there, then we've got like that. Okay, like that. So if you're not going to trade these intermediate swings like we just suggested, then basically you wait for this cycle to finish, you wait for ABC to finish, and we might be able to get long somewhere in the region of 129.50, maybe 129. 129.50 to 129 is approximate area, but it won't happen this week. It probably be late or early next week when we get that, and that's when we'll be going long for a big, fairly strong leg to the upside. Okay, so that is all the euro pairs, US dollar pairs done, and tomorrow I'll be going through the pound pairs, and we are trying to get long on some of the pound pairs like a pound Aussie, pound New Zealand, pound Canada, and similarly euro Aussie, euro Canada, etc. Okay, so we've got a bit of time. We basically now identifying where the market is. We're expecting certain things to develop in order to confirm what we are expecting is correct, and then we'll be in complete sync with the charts, and we should be the trade that we've been trying to stoke for quite a while, which hasn't happened yet, and we've been puzzled, but I think we are getting close. So maybe in the next week or two we should be able to get those trade line up, and we should be then moving strongly in those trades, and I think they will be very profitable. So just bear with us, bear with the market as it were, and just follow and see what we are expecting is actually panning out, and that would give us a greater confidence. Then we'll be able to develop a strategy and way to enter into these, and hopefully we'll be riding those trends for quite some time to come, few months at least, if not more. Okay, so thank you for that. As usual, any comments or any questions or things not clear, feel free to contact me by Skype or by email, and I'll be happy to try and incorporate that in our next session, which will be tomorrow. And tomorrow we'll be going through usual equity index, oil and dollar index, and then we'll go through all the British pound pairs and identify possible trades coming up there. Okay, so thank you all, and wish you all wonderful trading in between, and I will look forward to you joining me tomorrow.